Bismillah ar-Rahman ar-Rahim. Please pardon me, it seems like we are experiencing some delays. However, we were given the go-ahead. My name is Faiz Abu Awad. I'm the GSMA's MENA Policy Director. Good afternoon. Welcome. This is the beginning of the finance industry 4 years from now, predicting technologies and regulatory changes panel. The financial sector has undergone rapid transformations driven by digital innovations and evolving regulations. Today's discussion is especially interesting as we focus on the foundational elements of sustainable change and we explore how leaders are addressing it. Please help me welcome His Excellency Jamal Saleh, Director General of the UAE Banks Federation. And His Excellency Fuad Muhammad, CEO of Al Masraf. And His Excellency Charit Mendes, Global Head of Worldwide Banking at AWS. Ladies and gentlemen, we do have our key speaker with us here, Sa'adat Fahd Abdul Qadir Al Qasim, Director General of Endowments and Minor Funds Authority, Awqaf Abu Dhabi. You're very welcome. Please come to the podium and address us.
Thank you very much. It's okay, it happens with a bloodbath happening in the markets. I believe it's okay to have this confusion. So, Assalamu alaikum everyone. Good afternoon. Your Excellencies, distinguished guests, and visionary leaders. I'll make it short, given that our guests are sitting on the panel already. It is indeed an honor and privilege to open today's leaders session at the AIM Congress 2025, hosted in our beloved Emirate of Abu Dhabi. This gathering symbolizes more than just a convergence of financial expertise. It represents shared global commitment to fostering sustainable economic prosperity and resilience in an era of unprecedented change. As the Director General of Awqaf Abu Dhabi, operating under the visionary leadership of the UAE President, His Highness Sheikh Mohammed bin Zayed Al Nahyan, I am profoundly honored to discuss the strategic role of endowments in shaping our collective economic future. At Awqaf Abu Dhabi, our mandate extends beyond conventional asset management. It encapsulates a holistic approach to sustainable growth, community well-being, and global social development. Endowments today are dynamic instruments with the potential to reshaping economic and social landscapes globally. Our diverse investment portfolio at Awqaf Abu Dhabi, including $500 million dirhams in cash and more than 4,000 real estate assets, generating significant annual returns, clearly illustrates the transformative power endowments possess. These investments not only drive economic diversification, but also create substantial societal value, embodying a model of sustainable, purpose-driven finance. In 2024 alone, Awqaf Abu Dhabi strategic investment efforts delivered endowments revenues more than 150 million dirhams, reinforcing our economic stability and its ability to fund meaningful community initiatives. Among our flagship projects is the 1 billion dirhams Healthcare Endowment Fund, launched in strategic partnership with the Department of Health in Abu Dhabi. Through this initiative, we provide critical cancer care for patients with chronic diseases, individuals who would otherwise lack access to essential treatments. This exemplifies our commitment to leveraging financial strength for humanitarian impact. Historically and globally, endowments have consistently demonstrated immense potential as tools for long-term economic stability and growth. Consider the remarkable global benchmarks set by leading institutions. Harvard University endowment surpassing $50 billion, and the Wellcome Trust managing approximately $40 billion dedicated to biomedical research. These examples underscore the strategic value endowments bring to sectors integral to societal progress, such as healthcare, education, technology, and food security. Now, what does it mean for us as global financial markets further anticipating substantial technological and regulatory shifts over the coming years? We should be proactively adapting through innovation-driven strategies, embracing cutting-edge technologies such as AI-driven asset management, blockchain-enabled transparency, and enabled and enhanced sustainability practices. We are positioned at the forefront of financial evolution. Awqaf Abu Dhabi's approach ensures that we remain resilient and responsive, fully aligned with Abu Dhabi's ambitious economic diversification roadmap and broader global sustainability goals. We must extend our vision far beyond immediate financial gains and establish a legacy of economic empowerment and social upliftment that resonates across generations. For example, our management of substantial assets, including over 7 billion dirhams of stock holdings and around 1 billion dirhams in cash for the minors and interdicted individuals in Abu Dhabi, strengthens Abu Dhabi's non-oil GDP, supports community projects aligned with global ESG standards, and significantly contributes to the Emirates' sustainable growth trajectory. Reflecting on our global responsibilities, we recognize that financial decisions made today hold far-reaching consequences for future generations. Our strategic endowment investments reflect a commitment to addressing global challenges such as healthcare access, economic disparity, education inequities, and environmental sustainability. In doing so, we actively contribute to international development efforts, aligning our strategic goals with broader global initiatives. Awqaf Abu Dhabi is dedicated to fostering a robust, resilient, and equitable economic future. As we gather today, it is crucial to underscore the purposeful investment forms the cornerstone. As we gather today, it is crucial to underscore that purposeful investments forms the cornerstone of sustainable global development, especially during global uncertainties and volatility, such as the days that we live today. Distinguished guests, as you deliberate and engage in today's critical discussions, I encourage each of you to reflect on the transformative potential that strategic endowments hold. Let us collectively harness this potential, driving meaningful global change and ensuring prosperity that transcends financial metrics to deliver tangible societal impacts. Together, let us continue to pioneer innovative financial strategies that uphold both economic and ethical imperatives, shaping a future defined by stability, innovation, and inclusive growth for generations to come. Thank you very much.
Good afternoon, all. Thank you very much, His Excellency Fayad Abdul Qadar Al Qasim. Sir, your address, special address, will really encourage and inspire investors to do the investment to right directions towards sustainability. And as you rightly said, collaboration and innovation is a way forward. So looking forward for this Future Finance Forum portfolio for next 3 days, I am Prasanna Lohar, MC of this track. I am a founder of India Blockchain Forum, CEO of Future Transformation and Impact Investor at FSV Capital, working closely with a lot of banks in India, guiding State Bank of India on CBDCs or Union Bank of India on innovation. So next 3 days, we have almost 40 plus sessions with almost 150 plus speakers. And here we have this leader session, the finance industry 4 years from now, predicting technological and regulatory changes in the realm of the financial world and banking and transactions. And we have Mr. Moderator Fayaz Abu Awad. So Mr. Fayaz will take it forward with all the experts and the panels out here.
Thank you. Okay, so I would like to begin by exploring with you, Your Excellency Jamal, what is the thing that is of primacy right now on your mind, and what do you think it will be in 4 years from now?
What's the thing? The one thing?
It's a bit of a tough question, yes.
Because on my mind is probably 1,000 things, but if I'm gonna put it in one, I would have to say that we have a 3-letter acronym called FIT, Financial Infrastructure Transformation. This is a project launched by our central bank. It entails so many sub-projects. Each of them is gargantuan in size. It entails a lot of projects that we're working on as UBF. We are UBF, we are the 62 banks together. We work with our central bank on making sure that FIT is implemented. It's 3 letters, but it's huge. So if I'm gonna put it in one only, FIT is the thing that I think the most of. So I hope that.
So FIT now and FIT in 4 years, am I?
Actually, a big part of it has been done already. A big part of FIT has been done, has been achieved. I just left one head office of one of the sub projects of FIT, and I had to leave them to come here. That is fully developed, fully ready, now will be launched. So in 4 years, not only that we will have FIT, we're going to have FIT already up and running across all the projects that fall under it. And as I said, each one of them is the size of the largest project that you would have ever faced. Just to give you an example, you talk about open finance. It's not open banking, it's open finance, meaning all parameters in the country. That's one of a long list of huge projects. So in 4 years, we are going to have it all completed, and we will have it up and running already.
Interesting. And you, at UBF, you represent the interests of the banking industry in the UAE?
Not really. It used to be that we represent the interest of the banking industry until we changed our culture, that we represent the interest of all stakeholders. So we are representing the interest of our customers as much as we represent the interest of the banks themselves. We represent the interest of the regulator. Sometimes we, as UBF, we would go against. I have one of our members right here on my right. Mr. Fuad is the CEO of one of the members of UBF, and sometimes we, as UBF, we could go against our members, telling them, no, you have to do this. You have to treat the customer this way. You have to implement this. You have to comply with that. So in the old days, it used to be that you are representing the interest of the banks. Now you are representing the interest of all five. And the five are the members, the banks, their customers, the regulators, the shareholders, and the society that you're in. So those are the fives that we try our best to equally serve.
That is very interesting. So when we hear gargantuan and we're talking about infrastructure projects, I would think your sensors would be fully excited, Charit. And at the same time, Your Excellency Fuad, yours might be for a totally different reason as well. Large-scale projects do have inherently two aspects of them that are innate and inescapable. One is complexity, and the other is cost. So I would like to begin with Your Excellency Fuad. I know that you have been a visionary leader in the banking industry. You've guided institutions through digital transformation that has taken you through all the stages of a project from beginning to end, and you have intricate experience with the process, the difficulty, the challenges, overcoming them within the banking sector. So what is your perspective on the challenge of complexity and cost? And what is the association, if any, that exists between the amount of spend that a banking institution has to make and the level of innovation that it can get to? Is it true that the more you spend, the more innovative you can get?
Yeah, that's an interesting point. I think the financial industry, similar to many of other industries currently, can't work in isolation. It's all interconnected, especially with the technology part. So you can see a CEO of a financial, I think he should be a project manager now because of the amount of projects running, managing different complexity, integration with other financial institutions. Including integration with the clients now, having platform which ready, secure, and transmit the information between different entities. I think the first thing which comes to the CEO of any bank, the huge cost which we should implement, and then how much that should be from our revenue. I think that's a myth. If we work on, there are different solutions currently being deployed, and they don't cost as much as how they used to do. Before, we used to go to very specific companies where we can have secure, reliable technology. Nowadays, they are available with much lower cost, and I think more agile in terms of development. This is one. The second thing, I also do think the transformation when it comes, it's not only about technology. It's mainly the culture of people, the change of people's thoughts, the ideas which are there on the staff, the clients, and the regulator. The resistance is not so big now from people, but the culture of change, the mentality, the need of change, it's little bit needs push, I would say. At the same time, if you want to do an integration with other companies, I think at this stage, which we are currently in, requires a lot of collaboration between different entities. When we say the financial sectors, the banks, alongside with the client base. Now, we used to have protective into our database, but now we are either by regulator or even by choice that we have to open our APIs and get more integrated with the clients and others. So Rather than thinking about it from a competition point of view, it's more of collaboration, which is happening now.
Very interesting. Chair, Your Excellency, Chair, may I refer to you as Chair, please?
Yes, as Chair,
Thank
it's
you, sir.
completely fine.
So I saw you, listening, and I saw content on your face. However, I'm a bit of a skeptic. So when we hear open finance, like Jamal has contributed at the beginning, we're thinking of broadening the scope of a bank's activity. And when we think of the speed, the velocity of data, the volume of data, when we think of the dangers that are associated with exposing many touch points to the outside, the complexity should be the natural, an increase in complexity should be the natural result of all of these factors. Yet you were smiling. How do you see the financial institutions overcoming this complexity from a technical perspective?
Yeah. Thank you, Your Excellency, and thank you for the session. So I think complexity has always been inherent in technology. I think what we're seeing differently now is that by minimizing the size of change, you are actually able to reduce complexity and reduce risk and change. I think the two excellencies shared it well. The ability to be able to do small changes quickly means that you can iterate and change over time. And although there are complexities with open finance and opening APIs and building ecosystems in banking, I think what it's doing is actually touching upon some of the stakeholders that you mentioned, Your Excellency, in terms of being allowing the customers and the banks to be able to work with the customers in their value chain. So you take this example, and we've seen this globally. No one really wants a home loan. They want to buy a house. And being able to embed yourself into the home buying journey is the way you create an ecosystem and remove complexity for your customers, but also as a bank, be able to go further up that value chain and be able to get customers at that point of dream as opposed to that point of need, which is always finance focused. So when we think about technology complexity and what you're doing with APIs or what you're doing with AI, I think the key is really how do you make change small so that you reduce the risk of change and that you can iterate quickly and be able to meet customers' needs. And that's how I see the complexity of technology changing and becoming a little more simplified.
Could this be about low-hanging fruit, quick gains?
I think so that there are quick gains, but I think, we look around the world and we look at companies like Itaú Unibanco that have exited or 70% of their mainframe is now running on the cloud. Or you look at companies like Bank Inter in Brazil that's able to deliver 4,000 changes into production in a given day if they wanted to. So I think, most companies start maybe with the low-hanging fruit. Maybe it's the customer-facing channels, the call center channels. But across the board, we see modernization of the technology stack because to the Excellency's point, this is what's going to give you agility and velocity in your changes. And I think that's the key because I think the constant, and I think it's a well-worn topic, the constant is change. And I think being able to adapt to change quickly is the new norm that most organizations, whether they're a neobank or a traditional bank, are building towards.
Okay. Speaking of neobanks, so this goes, I guess, into the democratization of financial infrastructure. How relevant is this to the open finance proposal that is being implemented, for example, here in the UAE? Jamal, if you don't mind me asking, may I refer to you as Jamal, Your Excellency, please? May I remove Your Excellency, please?
I'm Jamal, yes.
Thank you very much.
Yes.
Thank you very much, both of you, gentlemen. It's a bit awkward, but it's definitely noted and given gladly. It's just to smooth the flow of the conversation. So we go back to the democratization of finance and open finance platforms. How is that in the interest of the traditional banking sector, Jamal? Those are still a key stakeholder in your organization's structure. Would opening finance out to entities outside of traditional banking be in the interest of the whole ecosystem? And how do you see that if it is the case?
Everyone will benefit from open finance to varying degrees. Some will benefit a lot, others will benefit less than others. If I'm gonna try to summarize it, how the ecosystem will be once you are living a full open finance ecosystem, you can think of it this way. Today, let's say you have an account with bank X and an account with bank Y, and you might be also owning an apartment somewhere. You might also have some shares in the stock market. You might be a partner in a company, etc., etc. As it is today, you are having to manage each of those in a different relationship using a different tool. And the only thing you can do today is if you go to tool A for the first bank and make a transfer to your account with the other bank. That's the only thing that you can do as of today. But imagine if all that is put in one platform, in one, let's simplify it, let's call it app, where you log in and you see that Jamal's open finance application, it's called Nibras, by the way.
I'm sorry, again, what is it called?
Nibras.
Nibras.
Nibras, yeah. Nibras in Arabic means like a lighthouse, you know. You were the Nibras of the group, meaning you were, outshining. So imagine that you have an app where you log in, of course, with utmost levels of security, and you will see that this is my account with Bank A, this is my account with Bank B, these are my shares I own on the stock market, this is the property I own, the apartment I own in, let's say Reem Island, this is the business that I am a partner in, etc., etc. Remember, when your ID is about to expire, you have to go to each of those and update your ID one by one today. And the same with your, let's say, account with the telecom provider, with the Etisalat or Do, etc., etc. So imagine when all that is all in one and you don't have to update anything. Your ID, when it's updated at ICP, at immigration, it automatically updates on all your relationships. You could now do whatever you want. Not only that, all FIs are linked. So for example, if you decided, yes, you are banking with Bank A and Bank B, but you would like to request a loan, new loan, and you want to see what's available in the market. So you say new loan, where all, and you will get the quotes from all the members, all the FIs that are in the ecosystem. So as of today, you're unable to do any of this. You're unable to, for example, you want to request a loan, pledging the shares you have on the stock market or the apartment that you own, etc. Each of those is a different complex process that you have to go and request one by one. Instead, having it all in one. It will simplify your life a lot. Now, what will it benefit a bank? One of the biggest problems banks have is that they have limited visibility about their customers. So they know that this customer, this borrower of mine, is having a loan with me, maybe the salary is transferred to me, etc. But I don't know much more. Now, you'll tell me you could request the AECB Credit Bureau, but that gives you the credit side only. You don't know the rest of the relationship, the overall relationship. So banks will be able to see a 360 of the customer, therefore fulfilling their needs, customizing the service to the customer based on their 360. They will see, you could link everything. It's just a simple API connection. Therefore, imagine when your car is about to, let's say, ownership is about to expire, or your car has become old, you'll get an automatic offer.
Alert or offer, yes.
It's not even an alert. It's much more than that. You'll be able to get a new car from a dealership.
Yeah, this
on-
reminds
on
me
your
of
app.
Yeah, this reminds me of the promise of mobile advertising, which I was one of the early pioneers of back in 2007 here. So we had promised as a mobile industry that all of the ads that you will receive will be totally relevant to you. So if you have children, you might receive offers for formula milk. If you're a single man, you might receive an offer for a sports car. If you're a family man, you'll receive a sedan.
We actually follow something similar from 2007, which was the day, if you remember, His Highness Sheikh Mohammed bin Rashid went on stage and said, I want to have every citizen and resident in the country, I want them to be able to get any service they want on this. And he showed his mobile.
Yeah.
This is exactly what we're going for. Everything you need will be on your mobile, and hopefully it will be in one app called Nibras.
Excellent. So the guiding light, Nibras. Interesting, but this is also
That's what it means. It's the
also-
shining lighthouse.
it's also is a good point to pivot into regulations, because there are certainly a lot of issues that have to do with privacy and serving customers better might not come at the same slow speed of regulations. So maybe, Fuad, if you could tell us global regulations and local local regulations, the comparison. This is a very agile environment we live in here in the UAE, and that's a privilege, I think. Customer expectations are evolving fast, and financial institutions have to keep up, and they have to redefine their relationships with the stakeholders. And do you foresee any specific challenges that pertain to issues like the API that Jamal talked about? Those are this is the frontier of being able to use data. And this is what a system like Charits would be hosting, that huge flow of data that might actually impact and shape our choices in the future.
See, there are 2 or 3 points you have just mentioned. One is the regulations and then the innovation. So these two, they don't usually come together. The innovation means you are inventing something new, not yet even known, not yet even regulated, not yet even thought of, correct? So that's the innovation. And I think now all it depends on the environment which you are staying in. In such environment where we are, I think it's more of adopting. So the governments, the entities, the regulators are all adopting the innovation, where we say you invent, find something new, and if it is workable, people adopt it, we will change the regulation accordingly. And I think that's freedom which we have, which allows us to explore more and keep growing and having more innovative ideas. So you leave the horse let it go through the path, and then you define the path behind the horse, rather than building the road and making the horse go through the road. So that's good thing which we have. The other part which I think you have mentioned also, the big data. We used to take decisions based on our hunch, our gut feelings. And then we said, okay, let's now do innovation, do even our thoughts based on data. At that time, we had to have data scientists, those people who can understand the data, and it wasn't easy to find such people. So we have data, we brought data scientists, now start doing the analysis, all these methodologies and all that. I think the thing which just recently was, when I say just that 2 years, the last 2 years, it's the AI. Now we put AI on the big data. I don't have to have scientists. I just ask questions. And this is also a shift in our mind. We have been trained, educated into give answers. Now has been changed. Now with the AI, I have to be trained to give questions, ask questions. And that's the shift which we are handling within our organization. We start asking questions to AI, and immediately we get answers. I think that saves a lot of time in terms of our direction, where we should think, and how we should get our innovation well. I think that's a great achievement, and that's how we utilize. Now the question is, what is the use case of your individual company for that AI? Because AI is also hype, it's reality, but it depends all on your use case. If you know what you want and you get that's the vision you have, I think you will gain a lot out of it.
Excellent. So that takes us back and connects us to the beginning of the cultural necessity of change, culture of answering versus a culture of asking the right questions. Interesting. So we hear AI and we hear big data, Charit, and we think, again, cost. So what are the advantages that exist now in infrastructure? My PhD thesis was on AI back in '98. Okay, it was a different world, and all our work was in theory because cost was astronomical. And so how has technology of today offered us to dream at this scale of what's going to happen in 4 years from now?
Yeah. No, I think it's a good question. So, and I think I just want to index on what you shared. I think what we're seeing is you're able to ask different questions of data, of information, and get different ways of information back. And I think that's fundamentally changing how corporate employees interact with systems. And I think that's really insightful. Now, when we think about the cost paradigm and why do we think it's different, it really comes down to the democratization of technology and AI. So historically, and I used to live in Australia, okay, it would take 6 months to go buy something. There was a large capital cost involved with that. You had to go buy that. You had to assume that you knew the outcome and you couldn't experiment. Now, the way that corporate companies, banks, etc., consume technology is on a need basis. So you're able to actually experiment with a very small cost and then only scale. So what that's actually doing is actually changing the cost paradigm. From a banking point of view, costs used to be something that you bet on from a 5-year landscape point of view and assume that you could today know what you were going to do in 5 years and buy the technology to do that. Today, we're at that point where you can consume a little bit of technology, determine if the use case works, and then scale it. I'll give you a really tangible example of this, okay? You look at Nubank in Brazil. Nubank is a neobank that started in Brazil. When they started in their first year, I think they had 300,000 customers. Today, about 14 years on, they have 114 million customers. If you assume that you purchase technology in the historic way, that company's profitability would have never gotten off the ground. But because they were able to consume technology as their business grew, it completely changed the cost paradigm and made what was something that was historically impossible or a barrier to entry actually a competitive advantage. And we see this in neobanking, we see this in traditional banking, in the way that both technology and infrastructure is consumed, but also how AI is consumed. And I think that's the difference that we see today versus if you were to wind back 15 years.
So in a sense, technology today allows us to even handle uncertainty better. because we don't have to commit, we don't have to go all in on
Exactly.
any specific idea. We don't have to address the whole project. As you mentioned at the beginning, from the get-go, we can break it into digital transformation blocks and try to
Exactly.
achieve those.
Yeah.
Jamal, I see things are on your mind. Share with us, please.
One thing, because it was said more than once, one thing to keep in mind, I don't want anyone to walk away with the wrong impression. All open finance ecosystem will work on pre-consent. Pre-consent. No one will be able to retrieve anything without you giving a pre-consent. That's very important to remember. The other thing is all data in transient nature is always encrypted. So there's only you, the receiver, will be able to understand what was transmitted when you get it. A big difference between the open finance and open banking that was done in other countries versus the way we are doing it, we don't allow peer-to-peer connections. That is where mayhem will break out. Everything is centralized into Nibras, and then
Hub and
Nibras
spoke.
will connect to you.
Excellent, excellent.
So it's not like, I know that other countries, some of them have done this, and it led to a lot of data leaks and privacy violations and so forth. That is fully safeguarded against. One, it's one platform. You integrate with it, and then the platform integrates with the other side. No peer-to-peer. Second is a pre-consent. So you have to say, yes, I want to obtain this information about me from the other side. And third is, if anyone will do a hit on you with your consent always, no one in transit will be able to read the information.
Excellent.
So those three will safeguard you. It's as secure as the app that you are using today.
Excellent. So, and to fulfill the promise of the title of this session, I would like you to please take a minute or two and project forward 4 years from now and tell us how would your organization be working with smart contracts, AI, and how do you see things changing in terms of new revenue streams and risks? I know it's a big question, so I will talk some more to give you some time to reflect upon it. But in 4 years from now, will we be using smart contracts as a foundation for all of our contracts? Will there be no traditional contracts? Will there be a need for a centralized blockchain to be holding all of these contracts? And if so, this is a national project, and it has to also connect to other countries and other regions. And as a digital infrastructure provider, as a member organization representing the stakeholders of the industry, and as a key player in the industry, you have your own shareholders' interests to think of, and you have the longevity of the whole ecosystem to consider when you're answering. So will there be more, or will there be different ways of interacting with those three elements? Charlotte, I'll begin with you.
Okay. You gave me the least of it. I'll start it. So look, what I see in banking, if we were to fast forward 5 years or 10 years in the future, I think the fundamentals are the same. People will still want access to credit. People will still want to start a business. People will still need to make payments. I think the technology and how that's enabled will be different. The way that AI, will be able to help drive contextualization and be able to smooth over business processes, I think is the key thing that we will see. Whether we get to smart contracts, whether smart contracts are required, I think it comes down to what is the immutable need that we're actually addressing. Smart contracts make sense in trade finance, supply chain finance, but if you're going to buy a house, maybe on the titling side, but maybe not on the bank side. So when I look at the technology, what I'm hoping in 4 or 5 years' time is we stop talking about generative AI and blockchain and we go back to the contextualization of banking, where banking services and finance is given in the context of that customer journey, whether it's buying a car, buying a house. I think that the other thing that I'll fast forward for is the concept of agentic commerce and how we think agentic commerce will work, and the ability for me to create a digital me and instruct it what I want and let it go interact with the set of banks, come back to me with offers, and then let me decide and iterate. I think that's a very interesting feature that we see with the use of agentic commerce. But again, that's going to come down to consumer demands and consumer needs and the immutable need that you're solving. Not the fact that it's agentic, the fact that humans want to offload work to something that could be automated.
So it's not about the technology, it's about what is being done with it.
Yeah, it's the immutable need that we're addressing, or that these gentlemen are addressing and other banks are addressing, which is why banks exist. It's to be able to provide capital and financing to drive the economy. It's not about AI.
Jamal, what do you think?
I like to simplify things, you know. Honestly, I don't like to use, you know, it's complex technology terms, you know, blockchain and AI, and we are already living the beginning of AI data-driven decision making. We are already living what's called blockchain. I don't like to use that word, but many of you don't notice what happens in the background of what some of the banks do for the customer. I can give you an example to look for, watch out for next time. You could make, for example, a payment and then make a payment next month. Sometimes you'll be asked to input an OTP that you get. Sometimes you don't. But I mean, is it the bank changing their mind or what have you? We have already our member banks, many of them, if you go to your ATM, let's say, and request an amount of money, at some of those ATMs, you may not actually have the money, but the ATM will give you the money. How does that happen? You have to look at the analytics that happen in the background, the algorithm that will run. You came, asked for X amount of money on the ATM, but you don't have that available balance. The ATM will think and the ATM will profile you, and the ATM will decide that I'm willing to take a risk and give you, let's say, an advance and give you the money that you have asked for, knowing the ATM again, knowing that you will be getting your salary transferred to you based on the profile that has been made of you by the ATM. The reason why sometimes you get the app asking for an OTP or a multi-factor authentication, while other times it's not. There's so much churning happening in the background, which will decide that this is you. It's you asking for this payment. I have no suspicion whatsoever that this could be a fraudulent transaction. That's why in some of the cases there will not be an OTP request and so forth. So we're already living it.
It's already here.
Now, in 4 or 5 years, I mean, there are so many projects, as I said. You asked me in the beginning what's on my mind, and you said name one thing. That's why I said FIT. But there are so many other projects that we're working on, all of which are all towards the digitization of every service offered by the bank. You said smart contracts and what have you. That's only one. We still have a few that we have to finish, but definitely in 4 or 5 years, all will be done.
Excellent. Fad.
I guess in all our process review currently, so if there is any chance comes to us, we keep saying that let's review the process as if we are completely digital bank. So which means let's have this transaction end-to-end completely digitally, from the execution, analysis, decisioning, and even disbursement, if any, or perform the transaction. While we will keep the human interaction, the person interaction for relationships, to build the thoughts and even to have the connection with people. However, the services parts, the products, all that should be done completely digital, and I think that's where people will go. Currently, we receive the requests digitally from most of the consumers, but then it goes back to the paperwork. So I think that what is going to change, the paperwork will be more of digital decisions, and once digital decision happens, you will confirm the identification of the clients and even the disperse of or consume the request. I think that's the focus where it is going. But relations will remain, and we want to keep the relation, the human touch with people.
So it's an excellent way to finish this talk. So culturally, it seems that your organization is ahead of the curve. All of your organizations are ready. I would like to have a special thanks from me to you. This session was very hard to prepare for in a very condensed period of time. I appreciate the time you have kindly awarded me out of your schedule to sort out the questions. It's been a pleasure working with you for these few days. Thank you very much. Ladies and gentlemen, please join me in thanking the honorable panelists.
Thank you.
Do we have any questions?
Yes, please. Hiya.
No. Well, hello. Thank you very much, Mr. Chair. And I'd like to thank and congratulate actually the esteemed speakers for their excellent participation. A special thanks to my friend, Mr. Jamal. Well, I'm just curious, to be honest, to hear somewhat about prospective central bank digital currency, if there is any project in the pipeline in the UAE Central Bank, because I'm afraid that most of our discussions today concerning digitization in the financial sector would be affected maybe significantly, but of course positively, hopefully, using the CBDC. Thank you very much.
If you remember when I started, if I was asked me for one thing, and I said FIT, and FIT has a long list underneath it. One of the items is what we call CBDC. Now, I don't know if all of you know that the UAE had a digital currency 30 years ago.
E-dirham, I think.
30 years ago. 3-0. The UAE had a digital currency called e-dirham that was used for, I remember using it myself in the late 90s. That I was 5 years old at that time, but and it stayed used for very long until recently. The only thing about it that it was used only at specific outlets. It was used for government payments of fees. If you go, for example, to immigration, you could pay in cash or check or credit card or e-dirham. Now, if you think about it, the CBDC, I mean, let me simplify it again. I don't like big terms and what have you. To me, it's e-dirham expanded, made to be available for everybody, not only to the payers of the government fees, and to be accepted at all outlets. Now, we have worked with the central bank to make what we call phase 1 of CBDC, which was to make the currency, to make the bridge for it, it's called M-Bridge, by the way, and to be able to make a payment. And we made it with a few countries, China, Switzerland, Basel Committee, Thailand, etc. And His Highness Sheikh Mansour made the payment using digital currency, and it was between two banks
Yes.
and across the border. After that, we started working on the expansion of the currency so that it will become available all across, and at the same time to be able to pay or to use it, not necessarily to pay, you could also receive cross-border. So now we are in phase 2. The currency is there, and the bridge is there. We are working on the expansion to make it available as if it was any other mode of payment.
This would be an excellent way for us to finish our session now. Hopefully next year we'll have more updates about tokenization and where we've reached in this project. Again, please join me in thanking the panelists, and sorry for overtaking a little bit extra of your time. Thank you, gentlemen. Thank you.
Thank you, sirs. I think I invite you all to have a group photo, please.